The everything crash. The everything crash is coming, and I want to talk to you about what you're seeing on the screen right now. And this is obviously the thumbnail that I've had for this video. And I want to talk to you. This is actually looking at the last 40 years. And now, as you can see, the 40 years, this has completely now shifted. We've been going down through here, which this whole chart through here has been putting an uplift into the stock market, into obviously the equity market, which is the stock market, right? Property and so on and so forth. And when the stage is set right now, I'm going to share with you why I believe over the next 10 years and the big picture here, that why I believe that when this happens, one of the greatest everything crashes is going to come. There's what's called maybe even the Great Reset. I'm going to talk to you about what that is in this video. Also, let's actually just get into a bit of a market update. What's actually happened today across the markets. Now, on the Dow Jones, on the DJ, my microphone all good today? Yep, cool. Right, so on the DJ, we can see here that we actually we didn't close strong, right? We're starting to get a close above this whole level number 9 through here, level number 9. We're starting to get in a nice close above this 9 moving average through here. But you can see what's been happening here, right? On these days through here, and if I blow this up, see how we're getting some wicks through here. We really need to see some real good pushing through if this is going to be a recovery process. Because as you can see, this last support or resistance level, maybe even going back through to, I'd have to say there somewhere, because you've got a lot of support all through here. And then a lot of support through here, as you can see. Look what's been happening here. We're completely rejecting it at that level there. And maybe even if I bring it down to that last level support, you can see we're holding that level now. We really need to see some strength coming in. And if we do get that strength, then yes, we're probably going to get to the upside. But if we don't, and then we don't see the move that to the upside, we're probably likely to see another move to the downside. But the move on the downside is probably going to be very short-lived. And what do I mean by that? I mean by this here. Check this out. This is where it gets so cool, right? If we do get something like this, this is not the start of a really big move to come. We're looking at the short-term process here, right? One of the really important things is to look at the market as a wave. And we know this, right? You can see how markets move here, swings up, swings down. Markets never just go straight up. And that's including for you gold bugs right now who think just because central banks are buying gold right now, the gold's just going to keep going up. Look at the reality, or otherwise you're going to get hurt, okay? But if I look at the big picture here, right, and the reason why I squeeze this up here is if you look at this here from a big picture perspective, actually I'll bring this up here. Let me take that trend off the screen. Remember that you can see from the chart process, right? We go through these waves process. So if we do have this move on the downside from here, and it goes down a little bit more from there, the market's not just going to do this, fall off a cliff, and that's it, all over. If you are short the stock market, or if you're looking for the top in the stock market, we are not going to get that, okay? What we're probably going to get is if we do get this here on the daily charts, this here is probably going to equal to that. We may get a bit more downside to come, and then we get a very nice rally. Then we get a very nice rally up to these levels up here, which is likely to come. And that there could be a month or two of upward movement. All right, guys? So we can see that that's what's going on through there on the good old Dow Jones. Let's look at the Nasdaq as well too. Nasdaq is really still holding. Look at this here. It's really still holding this resistance level here. If this is going to be a recovery process, we need to see this thing break above this. Now, this trend line here is this trend line here from the weekly chart. This is the weekly chart at the top here, daily chart down at the bottom. And you can see this major support level all through here. We're at that level now. We're at this level here right now. We need to see this thing break up. Okay? We need to see if we get this, if we get something like that, guys, game on for the bulls. And this is where stocks like Google, looking at the Nasdaq. So, for example, one of the stocks I'm looking at is Google. You can see Google. Google's been in a beautiful upward trend, right? So there may be some really good opportunities around Google, even Amazon as well too. So they're one of the two stocks I'm actually watching for right now when it comes to these markets through here, right? So if we do get a bit more downside to come out of Amazon, which that would be perfect for me. So I'm actually hoping for a little bit more of a pullback because, man, This is one of the greatest opportunities we're going to see this year, guys. And if we don't take advantage of this opportunity that's here right now, I promise you, 1 month, 2 months from now, you're going to look back and just say, what an opportunity that I didn't take advantage of. How do I know? Because one thing that's important to understand, traders, is that through the year, go back with the indices, that is, okay, with the indices, the stock market, even the S&P 500, which is pretty much doing the same thing as the Dow Jones. If we get a little bit more downside to come, same sort of thing, right? If we do get another bit more to the downside, it's going to be that last move, down, and then reverse. Looks like we may actually get that, right? But don't freak out. Then we're probably going to get the rally, and the rally is probably going to be up towards these levels up through here. So I'm actually hoping for a little bit more downside to come. Now, one thing that's so important to understand is that if we look at the stock market as a whole, and we look at how these markets, what generally happens once a year is at least once a year we get a good 10 or so % correction on the S&P 500, and then most of the time it recovers. Meaning it recovers 100% of the move, and we continue up to all-time new highs. I personally believe we're going to 7,000 on the S&P. I know you're going to call me an idiot and so on and so forth. That's me. That's me, all right? I'm out here in the public doing a video. If you're very, very, very confident in what you do, please do a YouTube video, right? Put it out to the world, and then let the scrutiny happen on your YouTube video. I guarantee you most people won't, right? Because you're very good on the little comment section there, but to put yourself on camera and then put yourself out there to thousands and thousands and thousands of people to see, you're probably not going to do that, right? I here am very, very confident that we're not at the end of this bull market yet, right? This happens at least once per year of this correction here. So, and then once again, I do see we're probably going to have a move up towards this 7,500. I've got a 7,000 target for the year. Again, call me nuts, whatever. Again, that's just my target out there, right? I'm going out there, putting that there. That's a target for me that I see on the S&P 500, right? And so we can see that that's what's going on right now when it comes to these main indices through here. At least once per year we get this. And again, most of the time, when we do get these 10% corrections, the freakouts, we rally, we completely retrace that, and then we make another all-time new high. And everyone that was fearful around this level through here, everyone that was fearful ends up saying, oh man, how can the market be going up right now? And then they're so surprised, right? They're surprised, they're shocked, and they're just not sure what's going on from here. And so this is one of the really big, interesting things from here. Now, even if it doesn't, even if we don't see a new high in the market will start, if this is going to be the top, a top is formed by what? Lower highs, right? I know this is something simple, but high, lower high, lower high, lower high, lower high, right? We start to get, even through this 2021 period, what did we start to get? What did we start to get? We started to get what? See all these lower highs through here, right? So I'll bring this over here for you guys. See what I'm saying through here? Even when we do start to form a top, when we do get a drop, we get a rally for a week or two. Then we go down for a month, and we may get this rally here was actually for a few months, and then we continue down. We're going to get these swinging motions. We're not just going to keep going straight down. And so that's where we are right now when we do get the rally. So the rally is coming. We're possibly going to have another dip to the downside, and then we see this rally coming from there as well too. Now, one thing I want to mention about the actual stock market, and something I was talking about with my actual private clients, because I'm with my private clients every single day. And traders, if you are struggling with your trading right now, you are totally confused about this market, you don't understand what's going on, you're confused, what's the difference between investing, buying gold, holding gold, you're struggling with trading, actually trading these markets, and you really do need some hand-holding, mentoring, coaching every single week and potentially every single day with me for the rest of this year, and you are struggling, you know you need some help, right? I want you to go to getjonshelp.com. There's an app that's actually a page there. You can actually see my real equity curve there that happened for the last 12 months. You can see testimonials. You can even read who I am about me more as well too. Scroll down the bottom, you can see that. And then I want you to click on the apply button and fill out the application form, and I'll personally call you to have a really good chat about the program, and we'll see if you're a good fit for that, right? Do not go out this alone, guys. If you're guessing, you're gambling, One, you're potentially missing out on hundreds of thousands of dollars opportunity because you don't know what you're actually looking for in the first place. And two, you're probably going to be making a lot of mistakes. A lot of mistakes equals a lot of lost income going backwards. And secondly, missing out on amazing opportunities because you don't understand these markets and you really do need the coaching and support. So make sure you go fill out the application form. Click on that second link in the description there, getjohnshelp.com. Go apply right now, guys, and I'll personally have a good chat with you on the phone, okay? So that's what I'm seeing through there. Now, one of the things I want to say about the actual stock market itself here is that just because the S&P 500 is doing this, do you know, right? Do you know, I've actually got a watch list right now, and here's a watch list of different stocks here, right? And if I blow this up a bit more, here's a bunch of stocks. Here's a bunch of stocks through here, right? You got the Amazons, you got the ADM, you got the HRL. Do you know, looking at this level 3, and I really want to share something with you, at least half of these trades and half of these watch lists are actually trades that I'm actually looking to get into, and these are from actually the S&P 500 and they're from the Nasdaq, right? So I've actually put up a bit of a watch list for myself, put it together here. Do you know half of these are actually bearish setups, and I'm actually looking for a trade on the downside, and the other half is a trade for the upside. Now, the reason why I'm saying this is that if you are going to the market with a blank statement, the S&P is doing this, so therefore all stocks are doing this, you're completely missing out on some amazing opportunities, right? Because once again, the purpose of me saying this is that when it comes to, now, again, I trade based off systems and rules, right? 90% of the time anyway, right? 10% of the time I don't, but 90% of the time I'm using systems and rules to find good opportunities. Again, that's where if you don't know, if you don't even know what to look for in a high quality setup, that's where you need to be, right? Because you're going to miss out on potentially millions of dollars of opportunities in your lifetime. So the purpose of me bringing that up to you, for you guys through here, all these different stocks through here, is what? I'm bringing these different stocks up to you to show you that just because I'm saying what is with the actual S&P does not mean a stock within the S&P can be a really good short opportunity. And there's both, right? There's really good bullish opportunities right now that I'm looking to get into soon, or if it does confirm, and potentially bearish trades as well from there. Let's go have a look at the good old silver price right now. Silver's having a little bit of a pullback, but on a short term of it, guys, we're starting to develop some really nice, good, strong trending when it comes to the silver price, right? We had this move up, we've had this move down, we've had this move up, we're just holding through here. So we're starting to get this stair-stepping phase. So silver may be getting ready for that breakout soon. I don't like the fact that we've actually been very volatile through here. The whole thing's been hugely volatile. As you can see, right, we've gone up, we've gone down, we've gone up, we've gone down. It's hugely, hugely, hugely volatile in the markets from here, right? Also, when it comes down to gold from here, guys, gold, pretty much a nothing day today with gold. But one of the things, guys, is I got a comment on my YouTube channel yesterday, and the comment simply said this here. Let me actually bring this up to here, okay, guys? And I want you to understand something from here. Let me bring this up here. So this is actually the comments that I've actually had on my comment section, right? So here we go, right? You have been wrong on gold in the past and will continue to be wrong, right? Here. Why? Because the buyers of gold are not retail, it's the central banks. And central banks do not care about the price of gold, do not care about the price of gold, only controlled rise and ownership. So therefore, what you're saying there is gold is going to continue to rise because of that, right? Because of that. Now, if that is true, if Mr. Duck Div 9334, if what you're saying is true, okay, let's just say what you're saying is true. It's all central banks, which, by the way, you know it's not, right? Now, by the way, central banks have been buying gold for years and years, not just now. It's not something they started buying it right now, right? They've been buying for a lot of time. But let's just say you're true, right? Let's just say, for the last 12 months, it's been central banks buying this up. Cool. Let's just say you're true there. You are correct, okay? What I've been saying here when it comes to gold is that I don't know whether we're going to get a really big pullback or whether we're just going to go through another sideways consolidation phase. But the question I must ask you, Mr. Duck, is this. If that is true, where were the central banks through this period through here? Did the central bank suddenly just stop buying through here for this 1, 2, 3, 4 months worth of time? What about this 3 months worth of time here? And what about this point 3 where we actually had an almost 8% correction in gold? And then we did nothing. What happened? Did the central banks then suddenly just stop buying through there? Is that why it went sideways? And suddenly they started buying again through here? So the purpose of me saying this here is that if you think that because central banks are buying, it's only going to rise, then what's been happening in the last 12 months? We know central banks have been buying for the last many years. And the purpose of me saying this is that, and the reason why I'm doing this here is because I'm trying to share with you that if you think that because central banks are buying, they have been for a very long time, and we're not going to get any corrections or pullbacks. Again, I'm not calling for a complete crash, not yet anyway. When we do go through a recession, gold's going to get hit hard, right? But what I'm calling for is potentially another one of these. Another one of these, another one of these. Because that's what it does do, right? Look at this here. It just does that. Strong move up, sideways. Strong move up, sideways. Strong move up. And all I'm calling for is maybe we get something like this here, a nice good drop in the markets. That's possible. It happened all through here, right? And we didn't get much through there, but it all happened all through there. Why can't we get something like that? Or we're probably going to get something like this soon. It's just how markets work. So I want you to look at what you said there about the central banks. Okay, cool, central banks. And if that is true, what you said, what happened through these periods through here? What about all through here when the central banks are buying? Because the central banks are buying for the last probably for the last decade they've been buying. For the last 5 years, right? So I really want you to think about that from a logical point of view of how price actually moves, and not just because central banks didn't just suddenly buy today and that's it. They're just going to get buying and the market's going to keep going up. And the reason why I'm saying this, if you're a trader mentality, right? You're a trader. This is not investing. If you're a buy and hold of gold and you own physical, this is technical analysis. This is technical analysis, looking at short-term movement, what's likely to come over the next few months. I don't know the exact top when this top's going to be in here. No one does, but I'm letting you know what's coming, right? Because this is the way the price action works, the flow of the market works. If you're a physical owner of gold, right, or you're a long-term investor of gold, you have a completely different plan, a completely different strategy, and only you know what to do with that. I'm not going to tell you what to do. There's one person in the comment section getting cranky at me because I'm not answering his question. And you know exactly who you are right now, because he's saying, I have physical gold right now. Should I sell my physical gold and buy it back when it gets to 2,000? I don't know it's going to go to 2,000. So that's why I haven't been answering your question, Mr. I've got physical gold. Physical gold is a long-term investment thing. You buy and hold and you go through the ups and downs and the swings and the crashes and all that sort of stuff. Now, I eventually see gold over the next 10 years being at 10,000. How it gets to that, we're probably going to go through a really big crash in the recession and so on and so forth. So if you own physical gold, this has nothing to do with you right now. I'm looking at charts. I'm looking at what's going to happen over the next maybe 2, 3, 4, 5, 6 months. Not next 10 years. Completely different approach, completely different trade. This is technical analysis at the hand of there. So I really hope that really helps you out there, guys, from that perspective from there. And also, this screenshot here that I talked about at the start of this session, I want to bring this up here. And what the screenshot was this chart right here. And what this is this here. We all know, and let me just, again, this is the screenshot here, right? This is looking at now. Oh, look at that. Right, this here is the 10-year interest rates, right? And then also you got here, obviously, the 30-year interest rates and the same sort of thing, right? It's the same sort of thing when it comes to this squeezing down through here. 30-year, and then obviously that's the 10-year. But let's look at the 10-year and even the 30-year. What we're seeing through here, as you can see, from this point down through here, we've been going down through here. What is this? This is interest rates getting cheaper and 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 cheaper. What's been happening through that process? Higher equity, right? The disconnect between the middle class and the upper class, the K-shaped recovery. Middle class gets destroyed, higher class makes a lot of money, right? Property ownership, booming in property prices. Middle class can't afford a property market, can't afford a property anymore, etc., etc., etc. We've been going through that process because, as you can see, we've been going down through all this time with the interest rates getting cheaper and cheaper and cheaper. Hence the reason why we've been able to accumulate more debt, more debt, more debt, more debt, more debt, more debt. More equity debt, more margin loan debt, more credit card debt, more debt, more debt, more debt, more, property prices go up, etc., etc., etc. But what I do say here is this. Back in the 1970s, as you know, all through here is when we went through that massive double dip inflation, right? We had a double dip inflation, and towards the end of the 70s, we had rampant inflation, and therefore what did they have to do? They had to really ramp it up through there, which is raising the interest rates up. And when this happens, which I do see happening again, I do see another inflation. Now, what's going to cause this other inflation? When the next recession hits, and the next recession starts to get under control from here, and we really start to hit this hard, right? Meaning that if we go through a recession, the economy, the Trump and the Fed, they're going to come together and say, let's do one of the biggest QEs ever, right? And they're going to put it into the system. Hence, what's going to happen? Everyone's going to get money. Everyone's going to get checks. A lot of money in the system. Hence, another reflation. But this time, it's going to be even bigger. What happens when it gets even bigger? You think this is bad. We're going to probably go down through to here. We're going to go through a bit of a drop, and then guess what? As I said on the on this here, right? Where is that? Where did that go? Right here, right? As I put on this screenshot here, and I really do mean this. It wasn't just a clickbait for you guys. Is that the 40-year shock? Everything crash. Because as you can see here, for 40 years, we've been going down through here. It's actually probably a lot longer. This is actually going to the 1930s. That was the 1970s through there. So for about 40 years, was that 40 years? I think so. Anyway, and then we can see the breakout now. We're probably going to come down through to here, which is going to cause the recession. Then we may even come down a little bit more than what we got here. But then the next reflation, all the QE is going to cause a massive inflationary spike, much bigger than what we actually saw initially. And then this is what's going to happen through there. And then we can see here, once this happens, guys, everything, governments, everything, game over. Equity markets completely destroyed, right? Property markets, like when I talk about the depression, right, and the massive movement on the downside, I talk about that from this perspective here, from looking at this level here. Can you imagine the tightness we're getting right now in the economy on our retail, public, and also private, or retail, public, private, but then also governments? Look how tight we've been, right? Can you imagine where we're going to be in 10 years when we do start to see another rampant inflation? And this is now up here around the 10, 11, 12%. The way we've been living here for and that's the whole great reset, right? The way we've been living all this time is cheaper. Everything up. We really haven't had any one really big bang to settle everything out. We did through 2007, but then we got that, right? So this is the whole complete shift from here. And if you, and the good thing about this here, the good and bad, if you're not educated about trading these markets on both the bullish and bearish, then you are really going to get destroyed. Again, if you really do need help with that, go to getjohnshelp.com. I will help you get prepared. So for the rest of your life, even if the stock market does crash, we can trade on the downside and make a lot of money as well too, right? We can actually do that. But if you don't know and you're just buying, holding, and being lucky in this bull market right now, I bought gold and I bought the stock market and I bought this and I bought the crypto market and I've been lucky, we all know that music's going to end. And if you're not setting yourself, if you're not planning the foundation right now to get yourself set so you can understand how to trade these markets, not just buy, hold, and hope, right? Those who are setting themselves up right now, meaning you're properly getting the education, the training, the mentoring to set yourself up, you're the one who's not going to be affected by this, because who cares if the interest rates are double, right? Because I'm telling you right now, the higher class, the people who have, most of the money that comes through, we don't worry about the inflation. We don't worry about whether meats, whether eggs have gone up, they're $3 today instead of $1.50 or whatever it is, right? We just say, okay, cool, just buy it. We don't care. So, but for the middle class, if you want to be part of the middle class, then we can see what's going on here. And that's what I don't want for you. This here, once this starts to take place, guys, this is going to lead to possibly the great reset of the debt, housing, equities, everything. For now, there's going to be a massive reflation, big moves in the markets all through here. And when this does happen, by the way, that's when we're possibly going to see the gold go to 10,000, but not now. Very soon when the market goes through a bit of a recession, and if the stock market's going to crash, so will gold.